Ladies and gentlemen, welcome to Wealth Tom. I'm your host, Norbert BM, and in today's episode, we're going to talk about oil because the king is back, baby. The biggest speculator in the market, that is oil, is back, and it's about to rip or it's about to fall. So we're going to talk about that, and we're going to talk about this subject in the upcoming moments just after we take a look at the market vital. So today is Monday, the 7th of October, 2024, and we have no major economic events today, but taking a look at the week ahead, we're going to have tomorrow the NAB business confidence report from Australia and the RBA meetings. Then we're going to have from Canada the balance of trade, and then on Wednesday we're going to have from Australia the Westpac consumer confidence, then from Germany balance of trade, and from the United States the FOMC minutes. On Tuesday we're going to have core inflation rate year to year, month to month, and also the regular inflation rate, and then on Friday we're going to have GDP from United Kingdom. From the United States, we're going to have the PPI moments, and from Canada, we're going to have unemployment rate, and then we're going to close up the Friday and the week with the Michigan consumer sentiment. Now, looking back on Friday, the 4th of October, we saw the markets having a good close after a difficult week. We had red in the entire week, and then on Friday, we have the jobs report, which came in better than expected, kind of rescuing the entire market there. So we finished up with the S&P at a positive 0.9%, finishing somewhere up there with 5,751. Then the Nasdaq also finished in the green with a positive 1.22%. Still in the green was the Dow Jones, finishing up in a 0.81%. There is. Now, taking a look at the futures today, we're seeing a bit of a problem. We're in the red. The market seems to digest that unemployment report and maybe come back down again. So I would definitely be cautious today in the markets. In the future sector, we see oil in the green and gold, silver, and copper in the red, excepting gold is now currently in the positive, but it was in the red the entire day. The US dollar also weakening, and in the cryptocurrency sector, we saw Bitcoin have a really good weekend, the entire cryptocurrency market, but today it's kind of giving up that gain. We have no earnings to report today, but in the upcoming days there are going to be a lot of earnings, so stay tuned to the channel. We're going to cover them all, the most important ones, of course. So let's go into the main topic of the day, the crude oil market. And this is what we see that is happening in the crude oil market. Looking in the last week, we saw oil post its biggest weekly gains in over 1 year since the March of 2023. The month contracts rising at 9.1% to $74.38 a barrel, that is for oil, and the futures end up with 0.9%, making it a fourth consecutive gain. Israel's reactions to the Iran's missile attack continues to be a main driver, mostly, along with comments from the US President Biden advising Israel on whether or not to strike Iran, and especially there where it hurts, and that is its oil infrastructure. And I quote, "With the situation remaining incredibly fluid and volatile, it means unlikely that participants will have convictions to play crude from the short side at this juncture." That is a quote from Michael Brown of Paperstone in a note. So here's my prediction for, and also the analyst's prediction for the oil markets. Listen, predicting WTI prices in a volatile geopolitical environment is challenging due to many unpredictable factors, especially when tensions in the Middle East continue to rise. However, historical data and current market conditions allow for some speculative forecast. This is why I created this diagram signaling where the price of crude oil could go. So let's think about the price range estimate. If tensions continue to escalate, most of our analysts say that WTI crude increases from 3 to 3.5, maybe $5 a barrel from this moment. Now, as I'm currently recording this, crude oil is at 76.14. Now, a rise in the price could bring oil into the 80-ish, 85-ish dollar per barrel range, maybe even in this week. Now, this could be in line with the recent movements seen during the geopolitical crisis that rose supply distribution risk. Remember, this is all about the risk of supply, not the demand. The demand for oil is not that big. So let's talk about distributions. The major supply disruption scenario could be as following. Should the tensions rise spreading further threats, particularly involving key oil exporters like Iran, or disruptions to critical infrastructure such as the Strait of Hormuz, prices could soar even higher. In a more extreme scenario, WTI prices could breach $90 a barrel, but that will depend on the level of disruption. So let's talk about escalation. Limited escalation if the conflict remains contained and does not directly threaten oil productions or transport, WTI crude could stabilize around the current levels of experience, only moderate again within the 75 to 80 range, that is dollar per barrel. Now, these projections depend on, of course, the geopolitical developments in the Middle East, on OPEC's actions, on OPEC Plus, sorry, not OPEC, OPEC Plus actions to manage supply and global economic conditions like inflation and demand recovery, particularly from China. So in conclusion, the oil market is currently looking very, very volatile, especially this week and the entire week ahead, especially the last week and the entire week ahead. You can see that the market is mainly being driven by geopolitical tensions and not by demand. So here's what I think. This is my pure opinion on it. Do not make any kind of trades or investments on my opinion because I'm not a financial advisor. But here is what I think. Iran did attack Israel with that latest missile strike. There was one casualty, and that was actually debris from a rocket landed on someone. So it was not a direct strike. Now, Israel will retaliate. Depending on what kind of retaliation Israel will have, the markets will go up or down from that point on. Sadly, this is a fluid situation, and sadly, it is about war, so we do not see any kind of rising economic conditions, and that is why oil is rising. No, it is because of war speculation and more demand for oil, actually not even demand, but oil disruptions. So with this being said, thank you so much for watching. Be safe out there. My name is Norbert BM. Please like this video and consider subscribing to the channel. Click that notification bell in order to get notified when we post new videos like this. I wish you a lovely day. Stay safe out there. Bye-bye.